Thanks to our friends at The Motley Fool for sponsoring this video. Visit fool.com/Rive to receive the top 10 stocks to buy right now. Tesla released their first quarter 2023 production and delivery numbers over the weekend, and it really tells an interesting story about where Tesla is in its growth story, where it has demand, and where it may be struggling. So I want to dig into those numbers, talk about what it means for Tesla, and then how we might be able to extend some of that to its competitors like Lucid and Rivian, some of those other high-end electric vehicle companies that may be struggling more than a lot of investors think right now. My name is Travis Hoium. Thank you for watching Rive Investing. Please subscribe here on YouTube for all my coverage, including a lot of coverage on electric vehicles right now. I want to start by going straight to the source. This is Tesla's press release showing exactly what production and delivery is each quarter. This usually comes out a couple days after the quarter end. Came out on April 2nd. So it was Sunday morning when this one came out specifically. But you can see here, production was 440,808 vehicles, and deliveries were 422,875. One of the things that I want to note here is that particularly the delivery number is the number that a lot of analysts are estimating. And a lot of times what the media will report on is what is the delivery number compared to what analysts were expecting. That's not how I'm going to cover this. I want to cover this in a context of what does it look like compared to last quarter? And then specifically, how much is inventory building given what we've seen Tesla do with pricing? Okay, so that's really the way that I'm looking at this overall, because you can see Tesla produced about 18,000 more vehicles than it sold in the quarter. This is actually something that has become a consistent problem. Fourth quarter 2022, if we go back to those numbers, produced 35,000 more vehicles than it sold. We can go back a few quarters coming out of the pandemic as Tesla was increasing production and actually not selling all of the vehicles it was making. It was building inventory. That's not a great sign for any product company. I'm not just talking about a vehicle company or an electric vehicle company, for any product company. Overbuilding means that you only have a couple of options. You can keep building that inventory and using up your cash to build product that may not actually sell. You can reduce production to try to match production with the demand that you have, or you can reduce prices. That's exactly what Tesla has done. There have been a number of price reductions over the last few months, starting in January, and this is really becoming problematic. But I want to put the inventory build into context first. This is production minus deliveries for each quarter in the last 5 quarters. So you can see over that period of time, over 78,000 vehicles were produced that were not ultimately sold to customers. Going back to this most recent quarter, here's the kind of shocking one. Model S and Model X. Almost double the production of Model S and Model X vehicles as opposed to what was actually sold. So that brings me to a recent announcement that Tesla was reducing prices for the Model S and Model X vehicles. That was between 4 and 9%. This is on top of cuts that took place earlier this year, which were up to 20%. So what does this tell us about the company? Well, Musk gave it away. We have found that even small changes in the price have a big effect on demand. This is the supply and demand curve. This is exactly what Musk is talking about. This is exactly what we're seeing in the results, is that there is not enough demand at the price that Tesla had their vehicles in the fourth quarter of 2022. What does that mean for the company? Tesla has said that they're going to increase production 50% per year on an aggregate basis. So over time, how are they going to sell 50% more vehicles when they couldn't sell everything that made in the fourth quarter of 2022? They're going to have to reduce prices. That's the answer. They're going to have to reduce prices, and as a result, margins are going to come down. We won't get first quarter 2023 results for a couple of weeks, but do not be shocked if there's a big drop in gross margins specifically and operating margins as a result because of the price reductions that we saw go into effect in the first quarter. That's only going to get worse, it looks like, in the second and third quarter because Tesla's going to be increasing production and people are buying fewer vehicles. The fact that those high-end vehicles, those high-price vehicles are seeing lower and lower demand, I think is really telling because we've seen something similar from both Lucid and Rivian, who reported their fourth quarter results a few weeks ago, and they were starting to see reservations drop. Now, both of those companies are in a position where they're trying to ramp up production so they have more demand today than what they can actually produce. But as they ramp up that production and they're producing more vehicles, it's not clear that they're going to have demand for all of the vehicles that they're producing a few years from now. Tesla is a much more mature company. It's making far more vehicles, but it's facing this supply demand crunch. And right now what we're seeing is that Tesla is building inventory as it's reducing prices. We can compare deliveries to what Wall Street was expecting all we want. But the bottom line here is that Tesla's margins are going to go down if it continues to prioritize growth over profitability. This is a trade-off that product companies, that manufacturing companies have to make all the time. And Tesla has said exactly what it's going to do. Now, I don't know what that means for the stock price, but I think it's very clear that we're going to see margins across the board be under pressure for Tesla. And Musk said it himself, that price has a big impact on demand. What we're seeing right now is that means that Tesla has to lower prices. The fact that they're lowering prices and they're continuing to build inventory, I think is really troubling. But I'd love to hear your thoughts. Leave a comment in the comments section below. And don't forget to subscribe to Rive Investing for online market coverage. Thanks for watching. I'll see you here next time.